Hello, everyone. Happy CPI Wednesday. How is everyone doing? So, good morning, Donald. Good morning, Patrick. Mike, how the heck do I restore the right column of streaming data on TradingView? And it's gone. Hey, Dave, did you watch the Cornell show? I'll show you. You mean if this, real quick, is this what you're talking about? If it's gone like that, you click on this right here, if that's what you mean. Or just make sure it's not collapsed also. See, if it's collapsed, you have to literally drag this side out. If it could be collapsed that way too. But those are the two ways to do it. There we go. We're done with the stream. Thank you for tuning in, everyone. Thank you. Okay, let's get back to where we sit. All right. Not that one. Oh boy, now I messed everything up. So, sorry for the delay. Here we go. All right, good morning, George. Good morning, Todd. Good morning, Jacob. Good morning, Martinez. Good morning, Anissa. Hey, Christo. Morning, John. There's your answer, Dave. So, yes, is that yes that I answered your question, or yes that you watched the Cornell show? That was, man, over 4 hours. Woo! That was a show. If you don't know what we're talking about, it's the Dead and Company's show from Monday night. Okay. With that, we had inflation. Bob's going to be joining us. I'm just going to let Bob talk about inflation. Let's just bring on the Bob. Hey,
Yo!
all dressed up.
All dressed up. I got on a t-shirt with my dress shirt with my sleeves rolled up. So pretty fancy for me.
Well, the market loves the inflation numbers. What's your take, Bob?
I mean, love seems a little strong, doesn't it? We're
It's up
definitely
almost
higher
a
than
percent.
Well, depending on what market you're looking at, sure. I mean, 0.8 on the S&P. It was up like 0.2 when the market came out. And I think, again, this is the correct short-term move for the market. I do. They haven't taken out the potential for a rate hike in June, although they've dropped it dramatically down to 10% from almost 20 yesterday, right? Actually, I should say almost 20% this morning. This morning before the numbers, it was 80 and change for unchanged, and it was 19 and change for a rate hike. So that's dropped a little bit. And yields have dropped a little bit. The 10-year I had marked prior to the CPI number at 352. I'm seeing it about 346 right now. So 6-point drop. I mean, that's a drop, certainly not double digits. But again, the issue we have when you look at this is rents propped up shelter. Shelter hasn't come down. This is the 5 consecutive month over month, year over year, 5% plus number on inflation. And that tells you that we're just kind of stuck at more than double the Fed's inflation target. So if you're a Fed governor, this does not make you comfortable at all. I mean, at all, because you're sitting here with inflation at 5% and it won't budge. Now, granted, long and variable lags, right? Definitely we're dropping on the rate side of things. We're dropping on the expectations, although they haven't gone away. And I don't think there'll be a rate hike in June. But yeah, the market likes this. I suspect over the next couple of days, this won't be something that the market holds on to because it's just not enough of a move. Kind of cracks me up when people are like, well, inflation's doing a little bit better. You're still more than double the Fed's target. Okay, we're in May now. You remember when the Fed, or do you remember when inflation, let me rephrase that. Do you remember when the year over year inflation topped the 2% level? Does anyone remember that? Anyone want to take a guess at that? At where that was? Or what month that was, I should say? Anyone? That's probably too long of a delay for people to look at it. We exceeded the 2% inflation target for the Fed on a year over year basis. And this is Again, CPI, which they don't look at, and this is headline CPI, which they, even if they looked at CPI, they wouldn't look at it. It was April of 2021. This is May of 2023. May of 2023. We're over 2 years into being above the 2% inflation target. So for anyone to see this as good news, they have to be as brain dead as Coco. That'd be the only way you could see this particular number as good news. Now, good news relative, sure. And again, I think this is the proper short-term response for stocks. So, but it is what it is. I mean, still got gold at 2045, still above 2,000 on gold. Copper is coming off, in the face of some economic slowdown. The dollar went from positive to negative. But when you look at it on an individual basis versus other currencies, really the yen is where you see some movement. I didn't even look at the euro. Where's the euro?
Euro's 109.90, roughly.
It's not even at 110 anymore. God, the euro just cannot break 110. Just can't get up there. I don't know why this is still showing me May. That's really annoying. May is not the front month, E-Trade. What's wrong with you guys?
Good morning, Andrea. So that's, I mean, we had some of the, in the year over year, we had some of the base effect, right?
Yeah, I mean, that's the thing about the year over year. We all predicted this. Look, Jim Bianco told us that year over year base effects were going to continue through July. And that the July number we get in August is when the base effects will get rid of or will go away, that it'll start to normalize. So, again, you guys, if inflation were going away, is this the response you'd expect from the markets? If this were a good enough sign to show inflation was down, is 0.8% in the S&P, that be good enough? Should be 2 or 3%, my opinion. But we'll see. It could be that over the next couple of days. The Russell is responding the best, and I suspect that's because the lower yields are going to help those regional banks. That's what it would have to be. Good morning, Andrea. How many school drop-offs you got? So anyway, that's my take on this number. I think this is a really good number for the markets. I think that stocks will probably finish the day higher. I suspect over the next couple of days, though, we'll see if this was enough.
All right. Well, there you have it. Again, people want to know what I think long term. I even said on the podcast, if we break out with, I don't know if we're going to break out with volume. I have some key levels higher. But until we really roll over where I said I'm watching for those closes below, you got to trade with the short-term trend. I am watching for a rollover play. And the multiples just keep growing. 23.84 PE, which is, that's why long term, again, the market is priced in perfection. In the short term, you got to trade with the trend until we start getting, there's a lot of key support in here. A lot of key support, so can't get overly bearish until that breaks. Although still watching for the rollover play.
Yeah, again, this response to me is the correct one. So in the short term. But the inflation picture is not looking better. It's really not. Well, let me rephrase that. It's looking better. It's not looking good, though. It's almost as if, you know what? I don't like to use the cancer analogies that everybody uses. I think those are a little insensitive, but it's not coming down quick enough, and that's really what it's going to look like. Okay, that's what the Fed is looking at. And inflation is stubbornly above 5%. And also look at the month over month headline. Okay, actually look at both month over month headline and month over month core. Mike, Andrea's got 2 middle and 1 elementary.
All right.
She is a committed person, just so you know. FYI, there were 2 short sale home listings. What does that say? I can't read that on the side.
There are 2 short sale home listings last week from buyers that bought in 2020, which is crazy with the amount of home equity in the Chicago burbs.
Yeah, not only that, but we've got about another year before a lot of these. And Andrea, it seems like you might be in the business, or at least you watch it. You can confirm it. Got maybe another year before all these refis come on the short-term arms that people did. That is not going to look pretty. It'll be 4 years into the short-term arms that people did, and it's usually 5 years. So they'll have to start looking to see if they're going to refinance or sell the house. That might be the crack in the housing markets. These things happen slowly and then all at once. Anyway, what I was going to say was the month over month, 0.4 and 0.4 as expected and as expected. Okay, so not wonderful. An increase of almost 0.5% month over month on prices, both core and headline. And then look at the headline versus last month. A 0.4% month over month increase versus a 0.1 last month. So correct market reaction, but not wonderful numbers, guys.
All right.
All right.
Thank you,
I'm out.
Bob. Thanks for taking some time.
I'll talk to you guys later.
Thank you. Bye. All right, everyone. Let's take a look at the numbers. By the way, remember Disney after the close today. We still are in positive gamma territory right now. We have another big call area around 4,200. S&P trading right now 4170 against a 75% harmonic. If I continue to rally today, 4188 to 4190 is my next key target area. Just want to see something. If we take a look, where do the short-term levels take me? Yep, right there. 4176 could look for a stop raise. 4188, 4190 is a key harmonic cluster. Support coming back in about 4153 to 4155. So that's what I'm looking at there. Daily cycles also getting back to the top, with weekly cycles still rolling over and big picture still in consolidation. The only one that's looking for the breakout right now is the NASDAQ. Daily cycles getting back to the top area, so I'm going to be watching the volume closely in the NASDAQ. But we almost came up to this 13,417 level. If we bust through that 13,486, then major cluster area 13,540 to 13,560 to the upside. Again, for all these things, I am watching for rollover plays in the long term, but they have to get some technical damage done. For example, until the NASDAQ really gets below 12.7, it's not much. So, Dow going to be watching again. The double is not invalidated until it closed above 33,982. What's key levels that I'm watching against this 33,880 area? Then if it does continue rallying, 34,000 to 34,025. The Russell, I'll get to the Qs and the spiders in a second. Again, this looks like it might be getting some pre-market exhaustion, but we'll have to see. Going to be paying close attention to the tick on the open. Above 1784, major overhead Russell resistance around the 1793 to 1795. So, the spiders and the Qs. The spiders trading against the 75% harmonic. The next major things are to the upside is the opening 414.77 from the gap down opening on May 2nd, and then the gap fill 415.51, and then 415.89 to the upside. From a support basis on any rollover, 413 is the first level of key support right in here. And then I'd be looking at, if it does roll over and break down, 412.10, and then we'd have a potential gap fill to 410.93 on the Qs. The Qs with the double that's never triggered. Next is 324.57. So just remember that number. I'm going to roll this forward to the pausing bar. 325.81, 327.58 are your numbers to the upside. Support coming in at about 323.65, and then major support about 322.25. So there's those numbers as well. What else do we have? We have the VIX just tanking back down. So again, no fear there. The 1 day, VIX, there we go. Looks like it's going to be probably back down in the lower range once it opens. The DAX, still a whole bunch of nowhere. A whole bunch of nowhere. A lot of these markets just don't have setups. The notes, a whole bunch of nowhere. So there's not much to force. Dollar index, still. So many things are in consolidation. Nothing to do there. Crude, by the way, now it's turned into, we did have a little potential double top. It's now turned into a triple top. But still, from a trailing perspective, the low from the 9th, so yesterday's low, 71.34, or a closer area that I'm watching, a 72.43 area, 72.40. If we start breaking down below that, then the little play off the bounce with the percent beat buy has run itself out, with daily cycles getting back to the top. Gold up slightly, but still overall in consolidation. Copper, we had that double bottom turned into a triple bottom. The yen rolling over, but there's nothing real that I'm watching for, until, at least for the downside, until we break this trend line, or for the upside until we get above about 135.60. Euro, still in consolidation. Bitcoin, still in consolidation. Tesla, looks like we're getting a slight gap up. My rollover plays, I'm watching for this channeling area. Until that, we really break this flagging channel pattern. You can see it on the weekly. Not watching for anything. We are going back into the weekly rotation zone above here, so I will more so be watching for the rollover play, but nothing yet. Key resistance 120, 174.25, and then 176 to about 177. ES double top on the 5-minute. No, that's not. There's too much separation. Too much separation. What I would be watching for, though, is if we start getting negative or not as positive internals at the open, and you trade back into this clear path move, then you can watch for some retracement. But your key support is back at this 41.50. There is not much. If it does backfill, which this is looking like a little exhaustion into the open, but I got to see the internals. At least they got to hold up to support a continued move into the open. Yet it does not qualify. With that, that is about it. just take a look. Disney, which reports, has no fantastic pattern either. Roblox, what was that today? I didn't even have a chance to look. I was too looking at inflation. It was a miss, and a gap up. That's sort of funny. But I'd be watching for a rollover play in that also. All right, everyone. Thank you for tuning in. I will be back after the close. I would really just watch if the internals don't favor the continued rally, because it still is in consolidation in the S&P. Watch for, if without strong internals, watch for potential rollover play. Strong internals, watch for that continued rally. It's all going to be off if really internals can support this, but it's already pulling back into the open. Be interesting also to see NASDAQ poking out a little higher high, if that can sustain, or if it's going to create a sort of a divergence fake breakout. But again, until early warning sign on the NASDAQ is if it breaks this little trend line for me. So we're still a fair way off from that. And that's an early warning sign. Can't get overly bearish though until we start breaking some of these key support levels. All right. With that, have a wonderful, safe, and prosperous trading day. I'll talk to everyone later. Bye for now.